Good morning or good afternoon, I mean, although some people in Australia are obviously still in the morning. Welcome to this webinar today from ESS Small Business and our affiliates. And today we have with you Ashley Evans, the Managing Director at AAA Financial Services. How are you today, Ashley?
Very good, thanks, Pete. How about yourself?
Oh, I'm pretty good. Just had a little technical issue, but we've got to sort it out now. Excellent. Okay, so we're on the COVID-19 survival panel. This is the 8th edition of these webinars. You can catch up on the previous 7 by going to our website, www.esssmallbusiness, where you can view the previous webinars that we have presented over the last 7 weeks. And today I also want to welcome the people who are at Facebook who have joined us on a live feed. I hope you're receiving us loud and clear. If you have any questions, can you type them in if you're watching us live into chat, and we will answer the questions later in the webinar. If you're watching us on Facebook Live, unfortunately you can't do that, but you can send us an email, peter@essbiztools.com.au at the end of the webinar or tomorrow or next couple of days, and we will get answers back to you. I'll contact Ash and he will give me answers to any of the questions that you have. The theme for this presentation today is looking at financing issues, and we have the right man to give you some insight into financing, especially what's going to happen once the government withdraws some tremendous financial assistance that they've made available through JobKeeper and through the cash flow incentive payments that they're making. And they have announced in the last couple of days that they're going to start to reduce for certain industries some of those benefits, and the first one is the childcare industry. So you, I think, should be starting to think now rather than waiting to the 30th of September on what you might be going to do in your ongoing funding of your business. And the second presentation today is going to be presented by myself, and we're going to look at research and development activities, because some of you may have been sitting down at home during this period of not being able to go into your offices or your workplace, and may have thought of some ideas to develop some new software, or perhaps you're good with your hands and you've developed some new products, processes or services, which might be mechanical or automotive or something else. And you're now starting to think about that this might be the next best thing. Congratulations if it is. And well, we will try to give you an overview of how you can protect your intellectual investment in that research and development. I'm the host, as I said, and so now we're going to move to Ashley Evans' presentation on current issues relative to financing arrangements in your business. So Ashley, I'm going to switch over to you now, thanks.
Thanks, Pete. I'll just share my screen. I
look forward to hearing from you.
Yeah. There we go. Hopefully that slideshow's come up now.
Yes, so you're there now. Thanks, Ashley. Yeah.
Terrific. Thanks, Pete. Look, I guess, yeah, it's very pertinent, as Peter just flagged, that the resources and the subsidies and grants that the government have put in place, I think they've acted very quickly, largely, and got that through legislation and with the support of various different organisations like the queue riders and the banks who are administering a lot of these support packages. So what I just thought I'd talk about today, obviously these aren't going to last forever, and typically the government, Mr. Morrison's been talking about September, I guess, throughout this thing to start winding these back. And I guess, touch wood, to date, I think the health side of things has been quite well managed to date. It'll be interesting to see in a couple of weeks if there's any outcome from those protests on the weekend. But anyway, look, I guess my slideshow today, I just thought I'd touch on some of these things. So basically, to me, it's all about planning. the first 2 or 3 slides, I'll just tell you a little bit about who we are, so and our team. So look, we're located in Townsville, on Woolcock Street. We've been operating for 19 years as a finance broker across everything from personal consumer finance right through to commercial and rural and equipment finance. Most of our clients are North and Central Queensland, but we do have clients that are across the country, so we are national. That's just a little bit of a snapshot. As I say, started in 2001. We've got 13 employees. There's a few grey hairs in amongst some of our team, so we've got a few years' experience, I guess, and we're sitting at around just a fraction under 3,000 clients across those different areas. Yeah, we just started the business. We felt we could get back to some good old-fashioned service that I guess over the years has probably somewhat reduced in some of the lenders. We try to tailor, we go around the kitchen table and actually have a look at your business and see, you can pick up a lot by your eyes and ears when we're out there talking. And yeah, probably a couple of key things there. We're not just limited to one lender or governed by who we can use. So we adopted a stance to get our own license. It does take us a fair bit of time to get that approved every year, but that does allow us to use the lenders of our choice, which is important. There's the team. Most of the team, there's 1 or 2 missing there, but that's largely our team there across those areas. What I just thought I'd talk about, which is relevant, I think, to what Peter, the topic today, is around what happens when a lot of these subsidies and grants are finished. So what I would say, and look, I could talk for hours about this, but I've picked out today two pressure points or 2 pain points, if you like, and which particularly through, obviously a pandemic's a very new thing for all of us, but through disasters, floods, fires, cyclones and those sort of things, we've had a fair bit of those issues up this way. So I guess I've just found in our business that it really does, even though a pandemic presents some different issues and different challenges, being Australia-wide and country-wide, and probably doesn't discriminate across industries either, whereas a flood, as an example, of fire is fairly geographically it's located in one small area. So just the pain points here: are you experiencing tough times making ends meet? Are you wondering how you can dig yourself out of this hole? As a business operator, especially if it's a sole trader, it can be a pretty lonely existence. You don't want to share all your problems with your workforce in a lot of occasions, and you don't want to try to take it home to your wife or your husband, etc. And then, not to mention family and family commitments stacking up. Where's the money coming from? Even just a time point of view. Obviously, through these challenging times, you're taking more and more time. You're working longer hours, and you're probably spending less time with your family. Financial pressures arise from any situation where money worries cause stress. So I won't go through every single word here, but that was that particular one. Some signs, just some bullet points here. Late payments, are you seeking extensions, credit card payments being missed, etc. Spending less money on necessities, increasing credit cards, loans, all those sorts of things. Even a simple thing of not really wanting to go to your PO box or to check your bill. So there's a number of little signs there, and these can turn into health issues. And I've seen this personally, with a number of clients that we have in a range of different industries. Those small things that can then escalate a bit and turn into some health issues, which obviously once we start having health issues, I guess without health we can't really operate the business successfully. So these can turn into headaches, feeling unwell, sleeping. That's a big one I see. People just don't get the sleep that they need, etc. So how can we help? And that's where I go into a business plan. I guess probably business plan is the next one, but just doing some planning. Why your head's above the fold? So through this murky period when you've got the disaster at hand and you've got to try to find your way, it's probably not the time really to do planning. The time to do planning is when you've got some time away from the business that you can think clearly and put steps in place. So that I've found with this pandemic, I know every industry or business is different, but what we went through, our office got flooded by a leaking tap, a tap left on last year in June and July. And then earlier last year, we had the natural floods up here where a number of our work premises was okay, but a number of our staff, they lost their houses. So I just found through those challenges that we actually put some plans in place. And so as a result, the pandemic, we weren't as stressed. We sort of knew the levers, and I'll talk about some of those here in a minute. We knew some of the levers that we should pull, even though it was a different circumstance, some of the things are similar. So obviously businesses face economic, physical, political, technology, internal staffing, etc., etc. So, you know, if you can undertake a resilience planning program, it's a big fancy long word, but it's really just documenting, you know, how you get through these sort of cases, these sort of issues. So, you know, identify your strengths and your weaknesses. You know, you might have some people that in your business particularly that are very strong in other areas, but you know, I know in our team there's perhaps some that are very resilient, others are, you know, there's probably some that worry a little bit more than others, etc. So we've all got different strengths and weaknesses that we can pull together and use in these sort of cases. Again, a lot of us probably do this mentally, but putting it down and document it is critical, because then you can reach out, you know, and have a look at it when these sort of things happen. Resilience planning. So 3, resilience planning process. You can prepare for scenarios that, you know, when those situations do arise, you have the resources and connections. So things like insurances, you know, have you reviewed and checked your insurances? We had a bit of an issue with our insurance, trying to get us under insurance with our flooding in our office there last year. So just doing some of those, reviewing those things, it will, when you've got to reach out, make the phone call to your insurance broker or insurance company, it's less stressful if you've actually reviewed those sort of things and you've got a good relationship with them. You know, allow you to think clearly and respond to situations rather than react and get angry and frustrated, and that just compels and compounds. So in developing that strategy, you should assess any potential risk for your business, the likelihood and consequences, and ways that you can manage those risks. Identify critical functions which your business depends on. So it depends if you're a plumber, electrician, or somebody like us that's office related, I suppose. Things like, you know, with our floods, with our computers and those sort of things, we're on the cloud. So it was really just a case of getting some new computers, and we can plug in again and away we can go. We can pretty much go. We were up and running within a few hours actually. Develop the steps that are critical for business functions based on different risks. Something that's, I haven't written in here, but something that is very relevant these days is cyber security too. As a result of people working from home more and more through this the last couple of months, there has been a substantial increase in cyber security. So just that's something we're going through at the moment, just going through and just making sure with in our case technology and those sort of things that you know, we're using passwords correctly. You know, if you leave a laptop in your car and your car gets broken into as an example, so you know, to make sure that people can't get access to information, all those sort of things. You might think it's you know, something that'll never happen to me, but you know, I've been to a number of seminars, and that cyber security is a very big piece. So prevention, as with everything, prevention is better than the cure, I suppose, at the end of the day. So the best way to protect the business against risk: keep your work environment equipment well maintained, check on your staff, do some background work on your staff, etc. Do some checks on, you know, where they've worked previously, and that we've probably never seen a bad resume, I suppose, at the end of the day. So staff training, make sure that's up to date, keep all your electronic data, electronic copies, all that sort of stuff up to date. You'd be amazed with the new technology, you know, things like passwords when you're just printing. If you've got a number of people in your office, how many times have we left, you know, we forgot to take that piece of paper off the printer, and you come back the next day and it's still sitting there. Well, you know, obviously other staff members can see that, cleaners can see it, all those sort of things. So again, just having passwords on your printers and those sort of things are very critical as well. Benchmarking. We've sort of using this in our consulting business that we've just started. It commenced a couple of months ago, and we call this the washing machine or the filter. And this is a great place to start if you just want to have a bit of a health check on your business. And I'll just identify, obviously no names, but I did one of these with a mechanic and fabrication business probably 6 weeks ago. A relatively new business, and we actually put his figures through this, and it compares it to a whole, hundreds of different businesses around the country. We've subscribed to a benchmarking company, and you put those figures in, and it'll compare turnovers, number of staff, the hours, your cost of goods sold, your expenses, so how much you're spending on, stationery or rates or rent or what have you. And we very quickly identified probably 3 or 4 areas that stuck out to us. The turnover was lower than perhaps an established business, but there was a reason for that, because you'd only been operating 12 months. Cost of goods sold was probably 15% higher. Again, when we delved into that, the client actually bought probably a lot more stock, etc., in that first 12 months. So there's reasons for that. Rent was another one, where his rent was probably certainly, it might have been 15 to 20% higher as a percentage of his turnover. But as his turnover grows, I think some of these things will come into balance. The wages and the charge out rate, we identified that, he was probably sitting $10 an hour under what the industry average was. So he's addressing that. Obviously, that's a delicate thing, but it's something that he needs to address, and he's committed to doing that. And obviously, the billable hours, that was something else that, obviously you're never going to get probably 100% charge out rate, but the way that we sort of looked at it was probably sitting at about 50%, where he feels his industry should be sitting at 70% billing hours. So certainly identified some really key areas that he could work on, and we're going to then roll that into a business plan for this gentleman. So, but that's really what it is. Benchmarking, it's a filter. It's not all things to everybody, and you've just got to, obviously it's all based on figures and how accurate, and there are some variables there. It's not going to be the silver bullet, so to speak, but it certainly gives you some very good direction about where you should be looking at. Work-related stress, this is probably pain point 2, and again, as you can see by the photo there, I'm sure that we've all, as business owners, we've all been there at some stage, and particularly through times like we're going through now. You do, obviously turnover is probably it has dropped. Percentage-wise, it could be a little bit or a lot. If you're running a coffee shop or a restaurant, it would probably be 0. And then you've got to try to maintain your staff. You've got staff that have got families and kids to look after, and they don't know when they're going to get their hours back up or even start back in work. So as a business owner, we've got a lot to, and I think we underestimate a lot. We've got a lot on our plate. So again, in simple terms, what we need to do is to identify these things, and I touched on a few other slides, but some of these stresses can turn into, I'm sure if I could talk to you all, that we would probably have 1 or 2 of these things ourselves. There is a lot of different things, but certainly headaches and fatigue and sleeping difficulties are probably some of the things that are a sure sign. So critical to look after yourself. Again, there's a number of other things there. I won't go through every one of these today. And what causes them? We're doing longer hours, job insecurity, all these sort of things are very, we don't perhaps have the best equipment or the utmost up-to-date technology, etc. All of these things. Poor relationships with your bosses, etc., with your staff. Times of pressure, these things can happen. So how can we help? In simple terms, again, like the benchmarking and the business resilience, I think it's critical to do a business plan. And we all know this, but how many people actually do it? I'd say probably 1 or 2 out of 10 really do a business plan properly, thoroughly. And the other thing is not only about doing it, but it's not about just sticking it in your top drawer and then 5 years later dusting it off. You need to be looking at this and reviewing it all the time, and this can take a lot of the stress. It's amazing when you start writing something down and just thinking about it of a night time before you go to bed, how much clearer, and what we call in our business here, getting your head above the fog. So, you know, all these things that are pulling you through the day, just, you know, get yourself your head above the fog and see clearly, I guess. So, as a few bullet points here, a lot of this I've talked about, but planning will alleviate and reduce your stress and anxiety in the months and the moments coming with financial pressures, natural disasters, and obviously in this case pandemics, etc. Also, like if there's partners, I mean, many businesses are a partnership. There could be family members or friends. You know, there could be one person that's thinking this way and the other person will be thinking the other way. And because you're so busy, you don't always necessarily share these things. So it's about getting input from all of the different partners. You might have investors. You might have some, again, could be family members or friends, etc. Or acquaintances that have actually invested in your business too. It's important to do the business planning, to share that. And look, in my humble opinion, I think it should be something that's addressed at least every 3 months and just reviewed and updated. It will let you explore new avenues as well. Just a little bit about here before I go into this next area is just obviously from broker to partner. So we've been a broker for 19 years, but through that, in simple terms, without reading all this word for word through this, we've just seen a need for our clients that they affectionately ask us to get involved in a number of areas that were further afield than just finance, and that's how the consulting business was born over the last 18 months, and we've sort of launched that in the last couple of months there. So this is just a little table I thought I'd put up off our website. I'd encourage people to have a look at the website. I know that's fairly small writing, but there's probably 20 or so topics in our business membership. We have household, business and rural memberships. Everything, there's a resource library, there's academy with a number of courses and inductions and workplace health and safety courses there that you can actually allow your staff to do. They're just ensuring that you're all compliant, etc. A whole range of different things there. I won't go through everything, but a range of different employment issues there as well, and topics, succession planning, etc. So yeah, again, I'd encourage you. The next part here, if I'm okay with time, Pete, is really just...
yeah, that's right.
I'm all good. Yeah, so the next part here, which I'll go through reasonably quickly, is just the tips, I suppose, that I'd encourage people to consider. I know this has probably been, some of these are probably widely known with the different grants and loans that are out there, but some of these are old cliches, but I will go through them and you know, again, just through the ups and downs of some 33 years, I suppose, now in the finance industry. You know, there's never been a time that these sort of topics really come to the fore. So the first one, cash is king. You know, as it says there, at no time has it been more appropriate. So controlling your cash flow at this time is paramount. Trying to come to terms with your suppliers, you know, defer repayments, reduce hours if you need to, etc. So again, it's always nice. I know it's not a perfect world, and these times do challenge us with our cash, but it's always nice just to have some cash in reserve, or have some ability, whether it's redrawing your loans and that sort of stuff, to take advantage if you need to, just a bit of a buffer. Deferral of repayments, again, I think this is a very useful tool. And look, obviously all of the banks, almost to a T, have been and have acted very quickly. And I guess with natural disasters recently, they've had a bit of practice at it. But I believe the lenders have done largely pretty well with this. Most of them have done 6 months. There's a few that are reviewing them after 3 months. But again, look, they're big companies, big businesses, publicly listed, and they've got a lot of, you know, resources behind them. They've got a lot of horsepower. So in my view, like the government, I think if needed, I'd certainly encourage people to adopt those and take up those deferrals, because that can actually give you a little bit of cash at bank, which covers that first one. So look, if the business is going well, certainly don't need to, you know, maybe you need to review that. If things are going well, then continue with your repayments. But yeah, I'd certainly encourage people to look at that. Have your information up to date. This is absolutely critical. I'll give you a couple of very quick examples. is with these grants that have come out, just as an example, I mean, first and foremost, having your information up to date allows you to make good business decisions and having that good relationship with your accountants, etc. But having your figures up to date are just critical. And I'll give you an example. That adaptation grant that was out probably not more than 2 weeks ago, it got announced on a Tuesday. You know, from what I saw, nobody really saw that coming. It got announced on a Tuesday. There was 10,000 grants available and up to $10,000 each. It was $100 million by the state government. And that evaporated, was exhausted by about 11 o'clock that Friday. So within 4 days, it was gone. It was incredible. I got 3 or 4 away, but there was a number of people that were ringing me and they just didn't have their data up to date. So we couldn't send it away. The people that were up to date and accurate, they had the information at hand. It was a few hours to put it all in, but we could send it away very, very quickly. So that's just, not only for your own business, managing your business on a day-to-day basis, but when those sort of things come up, you do have to act very quickly. The instant asset write-off, I haven't updated this because it was only a couple of days ago, but I think that's a terrific stimulus by the government. If you're able to do it, if you need a vehicle or a piece of equipment, and it might just bring it forward, but it's up to 150,000 now. Obviously, you can write that off in this year rather than perhaps over the next 5 years. Obviously, your accountant will need to advise you there. Josh Frydenberg, the Treasurer, has just extended that for a further 6 months, so it's out until December 2020 now, so we do have a bit more time. Rural Adjustment Authority, QRider, for those that haven't done it, that's a loan up to 250,000. That to me was the best loan. I won't go over this too much, but that was the best loan. It was 2.5%. I think the first year there was no repayments. The next 2 years were interest only, and then principal and interest for the next 7 years. You could pay it off earlier. Up to 100,000, there was no security. From 100 to 250, it was just a general security agreement, which is like an old fixed and floating charge over your company or your business. So that was very good. And look, that did erode very quickly or get exhausted, and the state government did double that, from what I understand. The federal government guarantee loan, that's where, again, up to 250. This one is administered by the banks, and look, it's just in my humble opinion, it's the banks are really assessing it. There's really no relaxation of credit policies on this one, to be honest with you, from what I've seen. So normal banks rules and guidelines apply. But yeah, the government are securing up to half of that with the banks, which is good. But certainly a 3-year term instead of a 10-year term, and a higher rate of 4.5 is generally what we're seeing there. Number 7, communication. Please keep the lines of communication, at any time, but particularly when there's times of uncertainty and stress on your business, etc. I just encourage, whether you use a bank directly or you use somebody like us as a broker, I'd really encourage you just to keep those communication lines open, because I've just seen over the last 2 months, almost daily there is things changing. There's different grants, there's different subsidies, there's different bank products, etc., that are coming out, different ways they're getting delivered to try to get speed to market. So really important just to reach out to your bank or broker. As banks are still open for business. Look, they are. We are seeing that. Touching on where we see going forward after September. A lot of our submissions that we're doing now, just about every bank is asking us to comment on how the businesses have been affected. What are they doing about that? How do they see, post-September, how do they see the businesses, reacting and acting after that, how it's going to look. The banks are certainly, I guess understanding that obviously these things aren't going to go on, I guess, forever, these subsidies, etc. So the businesses, they do want to know what their plan is again, and that probably relates to some of the earlier information. Debtor finance, terrific. I'm probably the biggest fan of debtor finance. I think it's very underutilised, and it can be something. And I look, I just see, coming back to the topic for today, as businesses, we've probably, every industry is going to be affected somewhat differently. Pubs and clubs and that have shut down and had no turnover, and only recently had limited reopening ability. Other businesses have still traded, but probably at reduced turnovers. So I just see, as we come back through this, and as the government measures and stimulus and monetary packages are starting to get wound back, there's going to be more and more pressure. And I've always said through this, I think, October's probably when, October, November is probably when we're going to see the biggest impact, I think, when these packages do stop. And what'll happen here, I believe, is your customers will start using you as their bank, and they'll stretch out terms from 14 days to 21 to 30. To, instead of 30, it might be 45 or 60 days, etc. They will try to stretch you, and that's where you've got to balance this. But that's where debtor finance could be a really useful tool to use. So again, as Pete said at the introduction, I know we're all working our guts out and working incredibly long hours, but just take some time, whether it's after hours or take a half a day, and just start thinking about your planning come post-September, because some of these levers, as I call them, could be very critical. And the last thing you want to do is to be running around and trying to get your bank or your broker to organise finance. And you can imagine how many people is going to be trying to reach out. I could even just mention quickly today, like with the with the increased workloads on the banks, even last week we were getting advices from the banks that unless you've got a finance deal, equipment finance deal into them, pretty much last week or this week at the latest, it's not going to settle by the 30th of June. And we've just got to appreciate that, their workloads, obviously, exponentially has been massively increased. So just don't leave it to the last minute. And the last one is your accountant. We've got a great relationship with our accountant, and obviously all the clients that we work with and for, the ones that are successful and the ones that can avail themselves of reaching for these grants. JobKeeper was a prime example. Your accountant they've got linking into your ATO portal. So you can do it yourself, or you can do it through your accountant. And I just know from experience, your accountant, can do it in a very, very short time, as long as your information's up to date. You've got the one-touch payroll, etc. So again, you really, in my view, you just got to have some really trusted advisors close around you in these sort of times. So yeah, look, that's probably my main topics for the day. That's a little bit about some of the topics. I'll send these slides into Pete, so by all means you can have a look at those on his website, and by all means contact me. We're more than happy. That's a little bit about a summary of us, and as we've got down here, we're more than happy to put your lending under a microscope. We've done two. Obviously home loans, you can, we've seen $2,000 or $3,000, $4,000, $5,000 savings. We've done two recently, one rural and one commercial business in the last couple of weeks, where we've reviewed them, and we've saved them over $100,000 each in repayments or interest a year. It's significant reduction in rates, whereas their existing lender just wasn't playing ball. So it's amazing. So that's me. That's some details of our emails, and for the finance and the consulting business, and obviously a phone number there. So anyway, thank you very much for the opportunity to talk today, Pete, and I'll hand back to you.
Okay, thanks, Ashley. And just again, anyone who's watching this recording, that if you wish to ask Ashley any questions, just send me an email, or if you've got the email address of Ashley's material there, you can send it direct to him. And what we will do is put your question and the answer that Ashley gives you on our website, so everyone can see the answers, unless you want it confidential. If you've got something confidential you'd like to talk to Ash about, just mark it confidential, and we obviously won't put it on our website then. So thank you very much, Ashley.
No worries. Thanks, Pete.
Okay, we're just going to switch back, and we will continue. The subject I want to talk to you today about is research and development. Some of you have probably been at home, obviously through this lockout stage, if you thought of something, a new idea, a new way to do a computer program. And if you're doing this, it's a good idea to try to maximize a taxation benefit that you can receive. And whilst I've made some comments over recent weeks in these webinars that I believe that there will be less government grants around once we get past 30 September, because the governments have pumped out an enormous amount of money over the last 3 months. And I think in some cases, they may have spent 3 to 4 years of their normal budgets on grants for SMEs. There's going to be some grants that I think will continue unabated. And one of them is the research and development rebate, because the federal government want people to undertake research and development, because it's all about seeking new knowledge. And we need new knowledge every day to keep the economy going, to keep the wealth of our economy up. And obviously we've relied on that this last 3 months in having a good federal balance sheet. The government has been able to borrow money and pay for this. This money wasn't sitting in bank accounts named the Commonwealth Government. They had to borrow it. So they had to have good ongoing processes been undertaking research and development and a good reputation. If the company's turnover is under $20 million, which I assume is most of the people watching us, maybe not all, you can claim 43.5% of the R&D component, the provable R&D component as an R&D tax incentive offset. And if your turnover is over $20 million, oh, sorry, I'm getting ahead of myself. If your turnover is under $20 million and you happen to be trading at a loss, which a lot of businesses do when they first start developing research and development activities, you can tick a box on your taxation form, or your accountant can. And what that means is that the tax office will deposit direct into your company's bank account. Just make sure your accountant's included your bank account details on the tax return. The ATO will deposit there the equivalent of 43.5% of your research and development activities. So if your company had a loss for the 12 months of $110,000, of which $100,000 of it was provable research and development expenditure, the taxation office would refund $43,500 to you, and your carry forward losses would be reduced accordingly by 100,000. So your carried forward losses are then $10,000. It's a great scheme, and unfortunately, I still find accountants that don't know that that exists. If your company's turnover is over $20 million, the percentage that you can claim for research and development is 38.5%. And there is no ability to get that cash payment, even if you're trading at a loss. Well, you wouldn't have your turnover over 20 million, I suppose. I mustn't have been thinking when I opened my mouth and said that. But anyhow, research and development process. Let's go through this. You need, first of all, to identify what you've done. The Taxation Act expects us all to conduct research and development similar to what we might believe a university would. Now, we don't want everyone having to run around with white coats on. You don't actually have to do that. But there needs to be a system, a process, and that would lead to an internal approval. Who's the team? What are you trying to do? There's a word comes into all this called the hypothesis. And the hypothesis is you make a statement as to what your research and development product, process, or service can achieve. And then you have got to set about proving that through experimentations. That's what you're doing the research and development on. And there is a process. Getting ready means getting the team together, making sure your team have signed on through employment agreements in an appropriate manner, because the company should be retaining the intellectual property that's developed. It's not for the benefit of a team member. Now, there's a general law that says if someone works for you, the employer owns the intellectual property, but there's been some variances of that over the years. So for an abundance of caution, I'd always get people to sign an assignment of intellectual property notice. Because if you get someone, I understand, who's not normally working in the category that the research project relates to, then that person can avoid the intellectual property agreement that's contained within their employment agreement, I've been told by lawyers. So we need to look at that. But most definitely any subcontractors that you're employing, unless you've negotiated a payment arrangement, which would probably mean you're virtually not paying them and they're going to receive part of the ownership of the product, process or development that you're working on. If it's not that, if you're paying them for their professional services, you need to have them assign their intellectual property. Because if you don't instigate that, that consultant or tradie or whoever it is can make a claim for owning part of the intellectual property in which they've worked on. So it's a very important issue. Planning the week, how's it going to be conducted? How often's the team going to come together? Is there going to be a weekly review meeting? Who's going to be the secretary for the group, keeping the records? Because this is what you have to do if you're going to claim the research and development rebate. It has to be documented. You should also be aware of the bigger picture of protecting intellectual property. If you're developing a product and you've already done your prior art searches, you have checked what's been published through patent offices in Australia, but don't forget overseas, what's already been protected, what's already been written about in technical literature. If you're developing something that's different to that, you should be giving consideration as to whether you wish to apply for a patent. Now, some people say to me, patents cost a lot of money. Well, they do cost money, but if this is the next best thing, it's probably in your best interest to try to protect it. And but at the very least, you need to have a system within your business organization that starts ringing a bell to senior management that, hey, we're onto something here. This might be a good idea. And the management team, the leadership team needs to be looking at it and then talking to the company's patent attorney to decide whether, in fact, a patent should be lodged or you should be going to try to protect it through trade agreements or some other similar protection, but it needs to be considered. And when you start the research and development process, you need to undertake what the legislation refers to as the systematic progress of work. So you start with 1, 2, or half a dozen, or maybe more hypotheses. This is your statement as to what you believe your product, process, or service will be able to do. Then you have to conduct experiments to prove that. So you show how you've worked your way through that. You also show how your experts that you can go to get their opinion, what they've thought of the product, what the costs are. And there's a distinction in costs between core expenditure, which relates directly to undertaking that particular research. So it includes the cost of your labor, the consultant's labor, subcontractor's labor, any materials that you've used in the process. That's the core cost. But then you have other costs, and other costs are more general items, the use of a section of the factory, the electricity and hire of plant and equipment that's been worked on a program. So you can justify the costs so that at the end of the year, you have a full detail, a complete diary of what's going on in this research and development project and what it has cost. That can then be submitted to your accountant to be claimed in your company's income tax return. So there's a significant amount of interesting work that you can be undertaking within your business through the implementation of a research and development system so that you can claim this money. And perhaps then you've identified that this is a great project that you've been working on, but it's going to cost $300,000 or $400,000 to commercialize it. And commercialize means getting it into the marketplace. You might need lawyers to draw up distribution agreements and agreements with your retailers or whoever's going to sell the product. You need all sorts of systems manuals developed. Where are you going to get that money from is the question I get from business people very regularly. The federal government was aware of that, and a few years ago, they went through not only the patent application process, but the one I was looking for was the assisting in the commercialization grant. The accelerating commercialization grant can supply up to $1 million on a 50-50 basis to enable commercialization processes to be undertaken. And if you're having trouble finding where that 50% is going to come from, you could look at forming a new company called an early stage innovation company. Now, this is a young company under 3 years of age, turnover under $200,000, expenditure under $1 million per annum, and it would be the company that has formally undertaken the research and development. So it owns the product, process, or service. The government set these companies up about 3 years ago to attract investors, because if an investor invests and buys shares in an early stage innovation company that is your company, then the investor can obtain a taxation benefit based on the amount of money they've invested, and they can also potentially receive the status of being a capital gains tax exemption when they sell those shares. They've got to hold the shares for more than 12 months. And when they sell the shares, hopefully at a big profit, so because you will also be selling yours at a big profit, or you could have sold yours at a big profit if you wished, and they will not have to pay any tax on it. Now, to go down this process, you need budgets, cash flow forecast, a business plan, and probably someone to assist you in negotiations with potential investors. So you can talk to your accountant or people like Ashley and at AAA Finance, and they can help you on this process to be able to utilize the early stage innovation company. It's a bit of a good secret at this stage, but there's a few hundred of them being formed around Australia. And alternatively, you could be interested in the crowdsourced funding. Your company, you might be laughing there when I said $200,000 in income. Your income might already be $2 or $3 million. As long as it's under $25 million, you can access the category of being called a crowdsourced funding equity raising company. This enables you to raise up to $5 million in a 12-month period and to issue shares to the public. You have to work through a government-appointed person called a crowdsourced funding intermediary, and you will need your accountant or your broker to assist in the preparation of the documentation, which again is going to be a business plan, budgets, cash flow forecasts. So that's giving you some background of what you might be able to do with a research and development project. So we started off with an idea. You took the idea to the next level and you've worked your way through, perhaps got a grant from Oz Industry under the Accelerating Commercialization Grant of $300,000. You've gone to the market to raise some capital to match that. And hopefully your business is now going to be very successful. That's the R&D journey that you might like to look at. Okay, so that's R&D. If you have any questions, please send me a note. I'm just going to check that we've got no one online that's asked that question. So that's not good. So if you've got a question, please send it through to us. But if you think of a question later on, or as I said, if you're watching this presentation on Facebook, you can send me an email and I'll give you that address in a minute. I'm now going to give you an SME news update on COVID-19. Just a reminder that if you haven't already done so and you're on the JobKeeper program, you have to have lodged your declarations for the month of June by the 14th of June. Just a reminder, and Ash referred to this, the coronavirus SME guarantee loan offers cease at the 30th of September. The Reserve Bank and the federal government made that money available, $105 billion. Their stipulation is if it's not lent by the 30th of September, it's to be returned to the Reserve Bank. So this is your opportunity if you want to get one of those federal government guaranteed grants for 50%. If you haven't qualified for JobKeeper at this stage and you're interested, don't give up hope. If your turnover has reduced in the month of May, or indeed in the month of June or July by more than 30%, you could then submit an application to the tax office. And if they approve that, you would start with JobKeeper from that month. Now, just be aware that the government has announced that on the 23rd of July, they're going to announce a review into JobKeeper. And they've already announced that there's significant changes affecting the childcare industry. So my comments then would be on the basis that your industry is still able to access JobKeeper. Now, we've had the announcement in the last couple of days on the home builder renovator stimulus package. It's been announced by the government. Now, you as a business operator are not going to receive this money directly, but your customers could, and therefore, hopefully they're going to be able to spend with you if you're a builder or a subcontractor that's involved in building of houses or renovations. So let's go through it. It's already operational, started on the 4th of June and runs through to the 31st of December. The stimulus for a homeowner is $25,000. It's to build or renovate a home. The eligibility is based on your 2018-19 tax return. So if you haven't had that done yet and you want to take advantage of this, you better get your tax return lodged quick. And you'll have to go through your accountant because you're late if you are not going through an accountant with your tax return. There is a means test, so a single person earning up to $125,000 based on your 18-19 income tax year can apply, and couples less than $200,000 combined income. You must intend to build a new home as a principal place of residence. So this is not to be rented out, it's a principal place of residence, valued up to $750,000, including land. That's going to be interesting in some cities around Australia, but that's what the government's decided. Or you're planning to renovate an existing property with the upgrade valued at between $150,000 and $750,000. So presumably the value has got to be under $750,000 at the beginning, but you can then do an upgrade that could cost up to a further $750,000, and you will get the $25,000. Existing properties, existing properties to be renovated need to be worth less than 1.5 million. Oh, that's a little bit different to what I just said, so I'll just go back. Oh, I see. Okay, sorry, I was wrong there. The planning to renovate an existing property with the upgrade, so that's the total renovation, can be $150,000 to $750,000. And when it's completed, the project has got to be worth less than 1.5 million. Have I said that right, Ashley?
Yeah, I think so, Pete. The only thing I'd add there is Just a couple of slides before, you talked about the 2018-19 tax returns. We just had a case, I won't go into it, but where the income for the couple was actually above the 200,000 in that year. But in this year, which is the current one, not quite finished, they will be below that. And we've actually done a bit of research, and some of this hasn't passed. It's got to go through state legislation, I believe, at the moment. But yeah, with the reading that we've actually done, it can be 2018/19 or later. So it can actually be this year's tax return as well.
Okay, thanks for that. I didn't realize. And I think Parliament's meeting today, aren't they? So
I think so.
It's on the agenda paper for today.
Yeah.
The Treasurer's come out and told everyone they're getting it.
Yeah.
He got a bit of reason for make sure that happens now, isn't he?
Yeah.
Construction must be that's a misspelled there. That should be contracted. Sorry, must be contracted to commence within 3 months of the contract date.
Yeah.
Now you can use these renovation grants for kitchens and bathroom renovations as long as it's performed by a licensed contractor. I don't know who's checking on this, but obviously someone will be checking within the government. But you cannot use it for add-ons for items like I've got listed on the screen at present: swimming pools, tennis courts, spas, saunas, detached sheds and garages. If you want to debate those, ring the Federal Treasurer, but that's the items that they're saying they will not fund this for. And I've already mentioned this, you cannot make these grant claims for investment properties, and owner builders are ineligible, because the government's stance on this is they're trying to use this subsidy to encourage the building industry and the subcontracting industry. So that's their reasoning. And obviously this money, if you're also eligible for a first homeowners grant or any of the various state or territory grants as well, it can build up to a fair bit of money, maybe 40,000 or even a bit more. So it's...
Yeah, Pete, just quickly on that, I've just had a couple of very recent, and has created a lot of activity just in the last few days. And together, if you combine this with the first home buyers deposit scheme, the government will, if you've got 5% deposit, the government will actually provide a guarantee to the bank for the remaining 15% to avoid the mortgage insurance. And if you also, as a first home buyer, up to 500,000 in Queensland, you don't pay any stamp duty. And look, I did a couple of sums for a couple of young fellas in the last couple of days, and I've sort of got the saving potentially sort of $63,000, $64,000. So it is that's across a number of different things, but particularly if you're a first home buyer, it is bringing people forward to consider it anyway. Yeah.
Okay. Thanks, Ash. So you're obviously helping yourself. So this comment today is targeted at SMEs. So it might be yourself or your family members that might be able to take advantage of this. And obviously what you're then going to be doing is helping the building industry and the subcontractor industry, keeping them at work. So it's a good initiative, I think, from the government. Okay, the challenge for today, as I see it, is start your planning for 2020-21 now. We've got about 3 weeks to go before we get to the end of fiscal 2020. But there's a lot of challenges in this next 12 months. And that's what Ashley was referring to before. Don't wait till the end of September to start thinking about some of these issues. You really need to be taking that half a day off now, go and find a nice quiet spot, maybe a couple of good cups of coffee, and sit down and think about your business, or go and grab your accountant and talk to your accountant or your finance broker, and make sure you've covered the issues, and do some financial forecasts and throw in some what if type calculations. What if your debtors went out by 10 days from what they currently are, or even 20 days? As Ashley said, some businesses will be trying to utilize you or as a business operator as their bank when business gets back to normal in October. I think you need your accountants to be doing more for you, far more than just preparing tax returns and annual accounts. And a lot of them have been doing that in this last 3 months, getting people ready for JobKeeper and some of the other grants. Why not upgrade them and call them your Chief Financial Officer and tell them you now expect them to do additional services to help you add value to your business? I think that's the challenge for today. ESS BizTools Small Business is here to assist you. We have a COVID-19 survival plan. We can give you introduction to accountants all over Australia who offer Chief Financial Officer services because they're our subscribers. So please visit www.esssmallbusiness.com.au. Our next webinar is on the 17th of June at 12 noon, AEST, in this series for SMEs. And we have Kevin Thiel, who's a management accountant, who's going to be talking about management issues relative to ongoing business problems. And Priscilla B. Smith's who's an accountant from Brisbane, is going to be talking about how accountants can assist SMEs to navigate through this difficult time. And to register for that webinar, please go to esssmallbusiness.com.au/webinars. And for more information, please contact us. And you can have a look at Survival in Difficult Times, Learn More, which is where we have summarized all the products which ESS has produced to assist you to navigate these difficult conditions. Or you can send me an email, peter@essbiztools.com.au. So to close, please stay safe. Start planning for 2020-21 now. Thank you for participating today. Thank you, Ashley.
Thanks, Pete. Appreciate it.
And thank you for the people who are watching us on Facebook. And once again, if you have any questions, please send us an email, peter@essbiztools.com.au. Have a great day. Goodbye. Thanks, Ashley.
Thanks, Pete. Appreciate it. Yeah.
Okay, thank you. We'll just stop all this now.